Welcome, everyone. Thanks for joining this webinar on public service loan forgiveness. We're going to get started in just a moment once folks have had a chance to join. And if you're just joining, thanks so much for taking part in today's webinar on public service loan forgiveness. We'll get started in just a minute once other folks have had a chance to log in. Okay, we can get started. Thank you all for joining. My name is Winston Berkman-Breen. I'm Policy Counsel with the Student Borrower Protection Center. We're a nonprofit policy organization working at the federal and state level across the country to end the student debt crisis. Today, we're offering a webinar on the Public Service Loan Forgiveness Program and some special short-term changes to that program that'll make it easier to access for public service workers with student debt across the country. The goal of this webinar is to introduce you to the program, explain what short-term changes are currently taking place, and then to give you some very concrete action items so that you can take advantage of this program and these changes before the upcoming deadline. There is some intentional repetition in this. For some people, this might be the first time they're hearing about PSLF or the changes called a waiver, or they may be unfamiliar with the steps that we have to take. So we're going to make a couple passes at some of these points and then really walk you through the steps you have to take using slides that show the specific website you have to go to and which buttons to click on the website. So there is, again, some intentional repetition just because we want to make sure if this is the first time you're hearing about this, you leave at the end of this webinar knowing exactly what you have to do. We have about 30 minutes of presentation, 30 to 35, because we've included some updates, some recent updates. And then we will save the remainder of the time for Q&A. So hopefully we'll be able to address all of your questions that aren't addressed in the presentation itself. I will ask that you wait to add your questions to the Q&A until about 20 or 25 minutes in, because it's been our experience that we can answer most of the questions people have in the presentation itself. And if you wait and just make sure your question isn't going to get answered, it makes it much easier on the back end as we're doing the Q&A to find those questions that haven't been answered yet. So again, if you can wait until about 12:30 Eastern time, or about 20 or 25 minutes into the presentation before adding your questions in to the Q&A. Great, and this recording will be made available later, and we have online resources that we'll be sharing with folks. So if you didn't quite catch something, even though I'll be looping back and repeating some things, hopefully we can address that then. Okay, so I'm just going to jump in so we can get started on the Public Service Loan Forgiveness Program. So that being said, we're actually first going to do a quick announcement about the recent President Biden's recent announcement about cancellation. We're just going to do a quick slide, take about 2 minutes on it. This is going to be relevant for some of the Public Service Loan Forgiveness Program content we're going to talk about in a moment. So I just want to talk about it now and get it out of the way. About 5 or 6 weeks ago, on August 24th, the president announced a broad debt cancellation initiative. So about 20 million of the 45 million borrowers' loans will be completely paid off from this, and about another 20 million folks, for a total of 40 million, will get some level of cancellation. For people who qualify for federal student loan debt cancellation, they'll be eligible for up to $10,000 in cancellation, and an additional 10 for a total of up to 20 if they received a Pell Grant, which is a form of federal financial aid that's a grant and not a loan. If they received a Pell Grant at any point in their education, they're eligible, and they're otherwise eligible, they can get an additional 10,000 in cancellation for 20,000 total. So the eligibility for this is income-based. So if you had a federal taxable income in either of the years 2020 or 2021, that is $125,000 for an individual or $250,000 for a household, you are eligible for that $10,000 or the full 20 if you also received a Pell Grant. This runs through the individual, not through the household. So multiple people who have loans in a household could qualify. So a couple, a spouse, who each have their own loans, as long as they meet the household income eligibility, they could each get 10 or 20 depending on their circumstances. This is not automatic, and borrowers will have to apply. The application is not yet available, but it will be coming out in the next 2 to 3 weeks at some point in October. Even for some folks that the administration initially said it could automate it, about a quarter of the people they thought they could automate it, they're going to have to receive an opt-out opportunity. So if they don't want to receive this cancellation, they can then respond to the opt-out. That also hasn't been sent, but I'm just making that note because some people won't have to take the affirmative step to apply, but they will get a notice saying, if you don't want to receive cancellation, you should let us know. So one of the reasons we wanted to include this slide up front is because there was just last week a change to this program. An announcement was made that sort of affects public service loan forgiveness in the rest of the presentation. So as of last week, certain types of federal student loan borrowers will no longer be eligible to get this cancellation. It's not about the income eligibility, that's the same. It's just that there are different types of federal student loans, as we'll discuss, and only those types that are owned by the federal government are going forward going to be eligible. It's an odd concept that some federal student loans might not be owned by the federal government, but that's the way that the program works. So we'll talk more about this, but in short, the sort of shorthand version of it is if your loans have not benefited from the pause on federal student loan payments over the last 2.5 years, and so you've had to make payments each month, not voluntary payments, but you've been getting statements and you have to make payments over the last 2.5 years, those loans are no longer eligible for cancellation under this program. I'll talk more about what you should keep in mind about that as you navigate public service loan forgiveness, but that's the recent update. The rest of the federal student loan portfolio owned by the federal government has been getting the payment pause for the last 2.5 years. Those are still eligible and folks should still wait for an application to come out for that. Now, cancellation overall does not replace public service loan forgiveness. It is $10,000 or $20,000 for some people. That's a lot. For other people, that's a drop in the bucket of their loans. So public service loan forgiveness, as you'll learn, can cancel your entire student loan debt. So it's really critical that if you are eligible for both of these, you apply for both and not just one over the other. And as always, please beware of scams. There's a giant anti-scam campaign that the federal government is launching this week. People will be taking advantage of all of these announcements, both Pslf and cancellation. Okay, so that's what we're going to say in cancellation for now. During the Q&A at the end, if you have more questions about it, let us know. But this is mostly a public service loan forgiveness presentation. But because of some relevance to public service loan forgiveness of cancellation, we wanted to start with the slide. And I'll point out later in the presentation where these two things come together. Okay, so what is public service loan forgiveness, right? Or PSLF. So Congress created PSLF in 2007 to help public service workers who were struggling with student loan debt, and also to make sure that future students and graduates wouldn't be deterred from entering public service because of their loan balance. So put quite simply, PSLF is the promise that if you work in public service for 10 years and make payments during that time, the remainder of your balance will be forgiven after that. That's a simple concept, but it's a little bit more complicated. So first, we're going to talk about how the program works in general, and then we're going to talk about the short-term special changes to the program, and then we're going to conclude by walking you through how to access those special changes. Again, some intentional repetition here. So how does it actually work? So there's actually 4 criteria. I'm going to say them quickly and then walk through each of them so you understand them. And the reason why we're going to go through the regular program and not just the short-term special program is because once the short-term one ends, the regular rules take effect again. So it's actually important that you understand the normal program as well as the short-term changes to the rules. Okay, so first you need to have a direct loan. That's one of several types of federal student loans. Second, you need to be in the correct payment plan on that loan, which for most people is going to be an income-driven repayment plan or an IDR plan. Third, you need to work in public service. And finally, you need to make 10 years or 120 qualifying payments. That's 10 years of 12 monthly payments on that loan while it's in the right plan, while you have the right job. So let's drill down into each of these right now. Okay, so only direct loans qualify for public service loan forgiveness. Direct loans have been the main federal student loan since 2010. So if you've taken out a loan since then, it is almost definitely a direct loan that already qualifies. If you have an older loan, such as a federal family education loan, an FFEL loan, or called a FEL loan, sometimes you see it with a P on the end for FELP or FEL, Or if you have a Perkins loan, which are loans taken out and are owed back to the school directly where you attended school, those loans, the Fel and Perkins loans, don't qualify in their current state. But what you can do is you can convert them into a direct loan, the eligible loan, through a process called consolidation. Consolidation is basically like refinancing your loan with the federal government. You're taking out a new federal loan that is the correct type and paying off your old federal loans that are the ineligible types. So you're just sort of trading them in. So under the normal public service loan forgiveness program and under the normal consolidation rules, that conversion program, the process of converting your loans is called consolidation. Under the normal rules, when you do that, you restart your clock on 10 years, right? Because it's a new loan and you need to have 10 years of work and payments on that loan. So when you're trading in one loan for another, you restart the clock under the normal rules. One of the changes to the rules, the temporary changes that we're going to focus on, is that that's no longer true. So if you have a certain number of years on an ineligible loan type, you can convert it and still get credit for those past years, even though you technically have a new loan going forward. We're going to talk a lot about that, but I'm just hammering home the point to you that under the regular program rules, when you convert the loan type to the eligible type through consolidation, you reset your PSLF clock. Okay. Second criteria, your direct loan needs to be in the correct repayment plan, which is generally the income-driven repayment plan. There are a whole number of payment plans for federal student loans, and only some of them are eligible. So if you're in an eligible plan, it doesn't matter how much you pay, it just matters that you're in the right plan. So the IDR, income-driven repayment plan, is actually a series of plans that all count as IDR. They go by the names income-based repayment, or IBR, income contingent repayment, ICR, pay as you earn, PAYE, and repay, REPAYE. Some other plans can qualify in some instances towards PSLF, but in general, IDR is going to be the best plan for most people who are seeking public service loan forgiveness. So there are some slight variations in the IDR plans, but generally they share a couple of characteristics which are important, which is that they set your monthly payment on your loan to be a certain percentage of your discretionary income. So normally your student loans, if you just take it and start making the payments automatically without opting into one of these IDR plans, your monthly payment is determined by asking how much do you owe, how long are we making you repay us, like over 10 years, and how much you have to pay us each month for that 10 years to pay down your loan. That's how they normally calculate your payments. Again, what the IDR plans say is how much do you make? We're going to run that through a calculation and figure out what we think is your discretionary income. It's not just your income. It's income above a certain level of protected income above the poverty line. So it's a certain part of your income. And then we're going to charge you a percentage of that, usually 10 or 15% of your discretionary income. This is meant to be the affordable repayment plan. And for some people, it is more affordable than the regular payment plan. So for some people, it is actually affordable. I want to acknowledge, though, for some people, it is still unaffordable, even though it's considered and marketed as the affordable option. So it is the eligible plan for public service loan forgiveness. So most people will want to be in it. But I do want to acknowledge that it's not always affordable. Another thing about income-driven repayment plans that I want to acknowledge for some people, not most, is that this is when you hear these stories about people whose student loan accounts are growing and growing and somehow they owe twice as much as what they borrowed. This is in part because of these plans. The way they work is you have a lower monthly payment, right? And sometimes that payment is so low, it can even be $0 if you're a low-income person or currently make no money. You can have a $0 payment or a low dollar payment. Sometimes that low dollar payment isn't enough to cover the monthly interest that accrues on your loan. So that interest just sits in your account and it builds up and it builds up. And sometimes it folds into your principal through a process called capitalization. And then suddenly you're taking interest on interest, right? So that is how you see these balances balloon up through this program called IDR. Now, two things to say about this. One, the government realizes this happens. No one did anything wrong when this happens. They're paying what they're asking you to pay. So because of this, they have a sort of release valve at the end. If you are in these programs for 20 or 25 years and you diligently reapply every year to confirm your income, you can have your loan canceled at the end of 20 or 25 years. Now, that's still a long time, but that's their current solution to address this otherwise debt trap, right, of keeping you in a ballooned loan payment. Now, for public service loan forgiveness, you're planning to get cancellation after 10 years. So 10 years also still sort of a long time, but the point is it doesn't really matter as much if your account balance is going up because you are working towards cancellation. So I wanted to give that context because you might know people in your life, or you yourself may have had an experience with income-driven repayment where it doesn't feel like you're chipping away at your loan account, and that may have been the case. But again, you're working towards cancellation in this instance. So the calculus in terms of whether to enroll in this plan is a little bit different. Okay. Third, to get public service loan forgiveness, you need to work in public service. The focus here, importantly, is on your employer, not your role. It doesn't matter what you do, it matters who you work for. So public service employers for this program are defined as any government, so that's city, county, federal, tribal, state, public school district, any 501c3 nonprofit, and certain other nonprofits that aren't 501c3 designated, but do certain public service roles like public safety or library services or things like that, working with the elderly. But the biggest buckets are government and 501c3 nonprofits. They are just categorically eligible. So if you work for one of them, if you are an employee of one of these, then you are also eligible if you take the other steps towards PSLF. Now, employment here means a couple things. One, you have to be currently, this is the case, a W-2 employee. You can't be a contractor, because if you're a contractor, the question is, well, if you work for a contracting company, what is their status? Are they a for-profit company? Are they government? Et cetera. So you have to be a direct employee, which currently means being a W-2 employee. You also have to be full-time, which currently is defined as the greater of 30 hours a week or more if your employer requires more. If your employer says 35 or 40 hours a week is full-time, then that's going to be full-time. If you work 2 part-time jobs, 2 or more part-time jobs, and each of those part-time employers is a government or nonprofit that counts, you can combine your hours, and as long as it's at least 30 hours a week, you can qualify. Now, I'll note here that the federal government is actually changing this definition in real time, and they are moving towards a definition where it's 30 hours a week, regardless of what your employer says. They are slowly implementing that, and you'll have to just keep checking their website online to see when that takes effect. In practice, we're hearing that employers that you can be considered full-time if you work 30 hours a week, sort of regardless of what your employer says, if you're full-time or part-time, as long as the 30 hours a week is on your paperwork, which we'll talk about, you should be fine. But again, continue to check the federal government's website, which we'll show you in a moment on this point. Okay. Finally, you need to make 120 qualifying payments. Again, a qualifying payment is a payment made on a direct loan on a qualifying plan, usually IDR plan, while you have correct employment. You have to have all of these things lined up. If you are unemployed or going to the for-profit sector, or if you drop out of a qualifying plan, then those monthly payments won't count. So they have to be made in full and on time in general. And if you leave, but they don't have to be consecutive or with the same company. So if you leave public service, you can come back and pick right back up where you left off. If you move between companies, you just keep adding on as long as your new employer is qualifying. So they don't start over unless you do that consolidation process where they currently will start you over, except for the special changes that are in effect right now. Okay. Some slight changes to the general rules. We're still in the general rules right now under COVID. The main one is that the payment pause months that I referenced earlier and that the majority of people have been experiencing since March of 2020, those count as a payment, right? So you still have to have the correct job, you still have to have the right loan type, but you don't have to be enrolled in the right plan or even make a payment, because it's a involuntary pause, right? Rather than deny you 2.5 years of PSLF eligibility, they're saying that all direct loans with people who have qualifying jobs, these months will count. So that is just an important thing to note, that even if you didn't make a payment, these paused months will count as long as you have the right loan type and the right job. This, again, still the regular program rules. All right, that sounds simple enough, but the program really wasn't working, actually, and maybe some of you have experienced this. So the program began in 2007, 10 years. So 2017 was the first class of people who could apply and say, I have 10 years under this program. There was a literal 99% rejection rate, and people were being rejected for all sorts of reasons that had nothing to do with whether they had a public service job. They had the wrong loan. They were in the wrong repayment plan. Their months weren't being counted properly. Someone, their servicer along the way, had told them, you're good to go, no changes. And then it turns out that they needed to have made a change years ago and were being robbed of this time, right? It was truly a failure, a policy failure, and a disappointment and a broken promise to public service workers who have student loan debt. Many folks took out loans or took jobs in public service relying on this program and were being denied this opportunity. So last summer, just a couple of years after that, the Biden administration, for the first time ever, opened up something called a request for information. They just quite simply wanted to hear from borrowers directly. How is PSLF going for you? What are the problems? They got a huge outpouring of responses from people of all walks of life in terms of public service work, telling them about their problems, these things that I mentioned. I work so hard, I don't make a lot of money. I thought I was on track, and then I learned I was in the wrong repayment plan, and now I'm not getting this. Like, how crazy is that? Same themes all throughout. No one told me I wasn't in the right plan, or I was affirmatively told I had everything right, and then it wasn't true. Huge outpouring. So that was last summer. Almost exactly a year ago to the day, and we'll get there in a second, the department announced that in response to this outpouring of information, it was going to do a limited time change to the PSLF rules. So for a limited period of time, and this was announced on October 6th, 2021. So a year ago today, this announcement was made. For a limited period of time, the Department of Education, which administers the Public Service Loan Forgiveness Program, will grant credit towards PSLF loan forgiveness to borrowers for months that previously didn't count for the program, either because they had the wrong loan type or because they weren't in the right repayment plan, sort of addressing two of those big problems. So that's in general what they're doing is we realize that in the past, people were being dinged for these two things in particular. We're going to try to fix those, make people whole, and then get them set up to continue going into the future. So again, some repetition, I'm going to talk through some of these points. Essentially, we saw these four criteria. What the department's waiver does is it gives public service workers credit towards loan forgiveness, regardless of what type of federal student loan they had, for any period of time since 2007 when they had a qualifying job, as long as their loan was not in default, deferment, or forbearance, right? So they didn't have to be in the correct repayment plan. They didn't even actually have to have made a payment for a given month, but their loan had to be in a repayment status. So again, any loan type, as long as that loan wasn't, since 2007, as long as that loan wasn't in default, deferment, or forbearance, if you had a public service job, you can get credit for that month towards the 10 years, 120 payments, even if you didn't actively make a payment. These credits will be retroactive, so you can get it all the way going back to 2007 if you've been working for that long, even if you were affirmatively told a certain month or period of time was ineligible. They're changing, they're going back, and they're fixing this problem, right? So I'm going to say it one more time, because again, repetition is our friend here, and it's very confusing. In short, for any month since October 2007 that a borrower had any type of federal student loan, worked in a qualifying public service employer job, and was not in default, deferment, or forbearance, that borrower can get credit towards 120 months required for PSLF loan forgiveness. It's not automatic, however, and this is why we're here today, to talk through what you have to do. So normally, again, PSLF requires you to have that specific direct loan type. And as we discussed, if you don't have that direct loan type, you can convert it through that consolidation process, but normally that resets your counter, right? So what they're doing now is saying, you don't have to have had a direct loan, but you need to have one by the end of this waiver period. And because we know normally consolidating to convert your loan to a direct loan resets your time, we're going to waive that. That doesn't count. So even if you didn't have a direct loan in the past, you need to consolidate during this program, during this special waiver period, to get one by the end of the waiver period. And then we'll give you credit going backwards for your older loans. You also need to certify your employment with the Department of Education. This is a public service loan forgiveness program that awards work in public service. And although the federal government, the IRS, might know where you work, the Department of Education doesn't know where you work until you tell them. So you need to certify with the Department of Education anywhere that you've worked since 2007 that you want credit for. We'll talk about how to do that. And you have to do these two things by October 31st, Halloween. That's the deadline. This means that if you have to convert your loan type by then, you have to have applied to do it. This means if you have to certify your employment by then, you need to submit your employment. This does not mean a couple of things. It doesn't mean you're going to get everything processed by the Department of Education. It doesn't mean you're going to see your credits. It doesn't mean you're going to get your loan canceled by this deadline. That is totally fine. It doesn't even mean that your consolidation application will be reviewed and your new loan will be issued by then. It just means that you have to take these two steps. Change your loan type if you have to, and certify your employment. There is a backlog. They will be awarding credits in waves. It could take months. It could take into 2023, although that is frustrating. So it's not like okay. It is okay in the sense that you will get it eventually, as long as you do your part by this deadline. Okay, and these credits are permanent. So even if you don't have the full 10 years worth, let's say you only get 2 years of credit through this, they're permanent. They stay in your account. And then after Halloween, the regular program rules take effect and you can continue to accrue credit under the regular program rules. And that's why I spent time talking about them. And the idea is you'll have gotten into a direct loan by then. And now you know you have to be in a certain qualifying payment plan. So everyone has been informed, caught up, and then going forward, they can accrue credit until they hit 120 and get their loans canceled. Okay. So that's the update, right? So what do you actually need to know? What do you have to do? So we think, and then we're going to walk through each of these, that there's 3 things you should do. Confirm that you have public service employer. If you don't, this is the backbone of the program. If you don't have a public service employer, frankly, the rest of this is not relevant to you. Confirm what kind of loan you have and then consolidate if necessary, if you need to convert it to a direct consolidation loan. And then certify your employment with the federal government. So we're going to talk about each of these and how to do it. So first, I'm going to give you more details of each of these, and then I'm going to walk you through screenshots to show you how to do each of this. So confirm you have a qualified employer. Again, nothing about this has changed. You still need to work in qualified public service, which is government, 501c3 nonprofit, certain other nonprofits. The one thing that has changed about this during the waiver period, which is important for a certain population, is that normally during the program, you need to be still employed in that type of job when you apply for and receive cancellation. It doesn't matter if you have 10 years under your belt and then you retire or go to the private sector. If you apply, you'll be denied in the regular rules. During this special set of rules, that's not the case. If you're not still employed, but you have the past 10 years or less than 10 years, you can still get that credit. But the cancellation is particularly important now, because if you've retired or gone to the private sector or are unemployed, you can get your loans canceled if you have enough under your belt, 10 years worth. Right now, during the special rules, as long as you take action by the 31st. Again, the cancellation might not happen until afterwards, but you'll be credited, you'll be grandfathered in, so to speak, and your loans can be canceled later on as long as you take action. Once the regular rules go back into effect, though, and if you only apply after that, or if you have a little bit more credit you have to get until after that, you're going to need to have the employment in place actively currently to get that cancellation. So that is an important thing that is waived under the special short-term rules. So again, we'll walk you through how to confirm if your employer is a public service worker. So is a public service employer. So the department does keep a list of this, something called the Pslf help tool. You can log in and check your employer. That's the best thing to do. There's also a search function that you don't have to log in, but we recommend logging in because you can start to build your account. You can search and see if your employer is listed. This tool in this database is not comprehensive. It does not have everyone listed. It only has companies, employers listed whose employees have previously applied, right? So they're building it out. Every time someone applies from a new organization, they add that organization. So what that means is if you don't see your organization included, you search for it and you can't find it, or you find it and it says it's ineligible or unclear whether it's eligible, but you know you work for a nonprofit or for the government, you should just proceed anyway. Just like keep taking the next steps. Don't let this hold you back. Again, we're going to show you how to take these steps. All right, step 2. What type of federal student loans do you have? This can actually be extremely confusing, so we're going to spend some time on this. So the 3 major loan types I've mentioned are direct loans, the FFEL loans, and the Perkins loans. So for public service workers to get loan forgiveness, by the end of this process, you have to have a direct loan by doing that consolidation conversion process. Remember, what's special by doing that now is that you don't reset the clock. You'll get credit for the past time, but you have to actually do it. We're going to spend some slides showing you how to figure out what kind of loan type you have. But if you don't have a direct loan, you have to consolidate, right? And then third, the final step, make sure you certify your employment with the federal government. They can't give you credit for a job you've had unless they know you've had that job. Any government, any 501c3, certain other nonprofits that are not also, specifically 501c3s. The form to do this, to certify your employment, is called the Pslf Form. It used to be called the ECF, or the Employment Certification Form. If you or your employer are familiar with it under that name, it's very similar. You can do it to do your past and present employment. All that has to get certified. That Pslf tool that I mentioned earlier will help you generate the form, and we recommend, for some reasons that I'll mention, that you use that tool. You can download a PDF and do it by hand, but doing the Pslf help tool has some benefits that we'll talk about. So we'll show you how to do all that in a moment. Okay, so now we're going to walk back through each of those steps and show you how to actually do it, starting with confirming that your employer is a qualifying employer. So one thing I want to note for you here is that just last week, the government revamped its website a little bit, which is a little frustrating, to be honest, because we're so close to the end here. All they did was change these top menus. You see the managed loan in red here. All they did was change the managed loans and those top. They didn't really change the sub pages. So this slide shows you that you can access the Pslf subpage by going to manage loans and then selecting Pslf. You now, that top menu says loan cancellation. It's pretty intuitive, but just I'm going to, you're going to look for loan cancellation, and then Pslf public service loan forgiveness will be under it. So you're going to click that. It'll bring you to the Pslf help tool, and you're going to click to launch the tool, and you'll see something like this in front of you. So what you're going to do is add and search any of your employers that you want credit for since October 2007. You're going to need their EIN, their employer, their tax employer identification number, and then enter your dates of employment. If you're currently employed with them, there's a toggle, a little button you can click that says this is my current employer, so you only have to enter a start date but no end date. If you don't know your employer's EIN, look on your W-2, ask your employer, or for some organizations, you can Google it. If you work for a big government organization or something, one EIN might actually cover multiple agencies. So you might want to just check your W-2 or ask your HR department. So when you put that in, I used to work with the state of New York. I put in their EIN, I put in my dates of employment, and you can see the search result here on the right, state of New York, and it says eligible. Again, this is not comprehensive. If the response is potentially ineligible or ineligible, but you think that your employer is eligible, just power through and apply anyway, right? It's worth applying. There's no downside to applying and getting rejected for Pslf. There's no harm, there's no penalty, no nothing. So if you think you might possibly benefit, you should power through and do it. And again, this will only have a list of people whose employers have applied before. So you might be the first one of your organization to do that. Okay, so that's what it looks like to search your employer and confirm their eligibility. Next, you want to identify your student loans. Again, this is much more complicated seeming than it should be, but we're going to show you the sort of shortcut way to figure it out, because you don't need to go into more depth than this. All right, so you're going to want to go to studentaid.gov again, that same website. And when you log into there, if you haven't already made an FSA ID to log in, you need to do that for all of this anyway. So you should do that when you go to studentaid.gov. You can click on your loan dashboard, and it'll bring you to a landing page sort of like this. Basically, you can see some loans here. It says 2 consolidation loans, and you can see that it's been opened up. That's sort of a drop-down menu. So we're seeing the consolidation loans here, which have a total of 136,916 balance on those 2 loans. Each of those loans have the word direct in them: direct consolidation, unsubsidized, direct consolidation, subsidized. Subsidized, unsubsidized does not matter for this purposes. It's just if it has the word direct, it's a direct loan. If it doesn't have the word direct, it is not a direct loan. It's as simple as that. If you look lower down, you can see 1 Perkins loan. Perkins is one of those loan types that we said needs to be changed. This person had already consolidated their loan. That's why it has a 0 balance, and that's probably reflected up here. But that's basically what you're doing, is you're clicking through each of these menus of your loans on your dashboard. And if it doesn't have the word direct and it has a balance, you know that's a loan that you have to consolidate. Okay, you can get a more granular list if you really want to of your loans by on your dashboard, clicking view details, and then download my aid data, and it'll download a text TXT file that will have your entire loan history, loans you paid off, loans you haven't paid off, in a long Word document, basically. And you can look through and see what your loan types are there. There's a loan type identifier. It says loan type. And next to it, it'll say FFBL or Perkins or direct, and you can do that. But again, you only are concerned with loans that currently have a balance, because that's what you're trying to get canceled. Now, if you have non-direct loans, you're going to want to consolidate them, right? Okay, so again, the menus have changed, but it's now under repayment. That top menu is going to say repayment, and then you can find the Consolidate My Loans, same subpage on there. If you click it on the drop-down menu, it'll bring you to this consolidation page where you can launch an online application. If you can, we highly recommend you do the application online. There's a paper version if you have to, but online is faster, and the whole thing you can do in about 20 minutes. It'll guide you through each of the steps, including which loans you want to include to consolidate, confirming the amount and the interest rate for your new loans, and having you select a payment plan and the servicer, and then you sign for the loan. Now, your new consolidate, you're going to want to select all of the loans that you want to include. So that should be any loan that's not a direct loan, right? Otherwise, you're going to leave it out and it might miss cancellation. The new loan balance will be equivalent to your outstanding debt on your other loans, principal and interest. And your new interest rate is going to be what's called a weighted interest rate, which basically means it's going to reflect it's not a market rate. You're not refinancing and getting current rates today. It's going to reflect your existing interest rates, which were set by federal law. So if you have a big loan balance with a low interest rate, but a small loan balance with a high interest rate, when you consolidate those two together, they're going to average them in a weighted way. So your new interest rate will be pretty low, right? Because most of the dollars coming into it had a low interest rate, and only a couple of the dollars coming in previously had a high interest rate. On the consolidation application, there's an option to click that you're interested in public service loan forgiveness. You should do that. You should also select MOHELA, which is the one under the highlighted one on the screen in front of you, as your servicer. MOHELA is the dedicated student loan servicer to process public service loan forgiveness. So your account will ultimately get transferred to them. You might as well indicate that you want them now. Now, we said that you only have to consolidate your loans if you don't have direct loan types. Now, there is a potential sort of workaround here too to get cancellation faster, even if you already have direct loans. If you have older and newer loans, like undergrad debt and graduate school debt, and if you worked in between, those loans might be on a different timeline towards the 10 years for public service loan forgiveness, right? If you have 2 years of work in between grad school and undergrad in public service, that's 2 years for your undergrad loans that your grad school loans didn't exist yet. You don't get to count that. If you consolidate those loans together, the way the federal government is doing this is it's going to give your whole new bundle of loans as much credit towards PSLF as the most eligible loan that you included. So in this example, if you consolidate your undergrad and grad school debt, even if they're both direct loans, the new loan will be treated like the undergrad loan in terms of how much credit to give it. So what you'd effectively be doing is getting your grad school debt canceled at the same time as your undergrad debt after 10 years. Whereas if you didn't do this, you'd have 2 waves of cancellation, right? Once you hit 10 years on your undergrad debt, which has more time on it, and then eventually 10 years on your grad debt. So that's a little something you can do if you want to align the cancellation deadlines for all of your debts. So we're going to talk about a caveat to that in 2 slides, though, so hold on. Okay, so remember that for regular PSLF, you need to be enrolled in income-driven repayment. So when you're selecting your repayment plan, we recommend in the consolidation application, we recommend you select an IDR plan. You can certify your employment through the application. It'll preview the monthly payments for you, and you should select one. That way, when repayment resumes, you're ready to go on your IDR. Okay, so here's the big caveat. So we started with the cancellation slide, right? And I mentioned that starting last week, those loans that are not currently owned by the federal government who have not been getting the payment pause are not going to be eligible for cancellation. Normally, if your loan is not owned by the federal government, when you consolidate it, you're moving it over to the federal government. So it's similar to the PSLF process, right? And for the first 5 weeks of the announcement of cancellation, that was the case. And then they clarified last week, or they changed their policy last week, but that's no longer the case. So for these borrowers currently, those borrowers whose loans are not getting the payment pause, those loans are not eligible for cancellation. That is currently the state of affairs. You can consolidate them, but only for other purposes. You're not going to get cancellation. If your loans are all owned by the federal government, they've been getting the payment pause, you can get cancellation through the regular process. So this slide is really as a cautionary tale for people who have both types of loans. You've been having some loans get the payment pause, some loans not. If you consolidate those together, it is unclear right now, but it seems as if the federal government, because you've combined your loans, that new loan will be tainted and it won't get cancellation, right? This is only applicable for people who have a mixed bag of older federal loans that are still privately owned and aren't getting the payment pause, and for borrowers who have loans that are newer with the federal government and are getting the payment pause, right, as a proxy for who owns them. It's only those people who are 1 foot in each camp. If you combine it, you're putting your eligible loans that are eligible for cancellation at jeopardy by combining them. So most people, again, aren't in this bucket, but since we're telling you that you have to consolidate for PSLF purposes, we're also flagging for you that if you consolidate and combine different sets of loans, you might jeopardize the whole thing. So in this instance, what you can do is you can consolidate your old loans to get PSLF, but don't consolidate them with your loans that are already held by the federal government. Those federal government ones will already be eligible for PSLF if they're a direct loan and can still get cancellation. And those other ones will then become eligible for PSLF and will not be eligible for cancellation, but you won't have tainted anything for cancellation itself. This is very confusing. It's breaking news, and I'm sorry that we even have to convey this to you, but that's what the administration has done, and that's what we're trying to make sure you're aware of. And we can talk about it more in the Q&A. Okay, certifying employment. This is the final step. You're going again, now it's under loan forgiveness, but then that public service loan forgiveness option, we're going to see some slides we've already seen. You're adding your employer, and then you're going to keep doing that for all your employers and add in all your relevant information. The help tool will then generate the Pslf form for you, right? Once it does that, you want to download it as a PDF, sign it, have your employer sign it, and then submit it to Mohila using the instructions on the form, right? It's a 2-page form. It's very simple, and then has a couple pages of instructions, including how to submit it. So you'll need to have your employer do this for each employer you're claiming credit for, right? Going back to 2007. Now, sometimes the help tool can be a little wonky, and in particular, sometimes it might not let you advance if your employer is a new employer for them, right? In that instance, it'll tell you, wait 30 to 60 days, and then we'll let you come back once we verified this and you can proceed. You don't have 30 to 60 days at this point, right? So here's what the federal government has said. This is also new. What they've said is if you access the help tool and generate a PDF, or if you access the help tool and try to generate a PDF and we tell you to wait for some time, you will be considered on time for the 31st deadline, the October 31st. We are going to make a note in your file. It's automatic. And if you get us the form after the 31st, either because it took longer for your employer to sign it or because we told you to wait and then we told you to proceed and the 31st had come and gone, you'll still be considered on time. So if you use the help tool to make your PDF, even if you have to wait until after the deadline to actually get it, you'll be considered on time. That's why we really encourage you to use the help tool to do that. If for whatever reason, though, you need to not use the help tool, you can download a PDF. I'm going to show you here on Mohila's website how you can find that PDF. If you need to use that option, you have to get it in by the 31st, right? You have to get it fully signed and submitted by the 31st, no exceptions, right? So there is an option to not use the help tool, but you have to stick to the deadline. If you use the help tool, you have a little bit of flexibility as long as you have started to use the help tool and taken it as far as you can go by the 31st. Okay. This is just something you can do to make sure you're using the right form if you download it yourself and aren't using the help tool. You definitely want to make sure you're submitting it to Mohila. They just became the servicer. So if the instructions are to submit it to Mohila on that section 7, then that's the most up-to-date form. Okay, so what happens when you submit it? You'll get reviewed. Eventually, your loans will be moved over to Mohila if they weren't already your servicer. And then you will get a letter confirming how much credit you have. And if you have over 120, your loans will be canceled. If you don't have over 120, you'll then proceed, continue to accrue credit over time as you have qualifying employment. And then once you hit 120, that same form that you use to certify your employment, it's all one form for the program, will then trigger cancellation once you hit 120. Okay, some common issues, then we're doing a new Q&A for the final 15, 20 minutes. Don't submit sloppy paperwork, right? Whether it's from you or from your employer, if you get your employer's signature back and they have scratched something out and rewritten it, ask them to redo it. The servicers will reject paperwork based on messy or sloppy papers. And that's frustrating, but that's just how they operate. And so we don't want that to happen to you, right? So it's always better to just reprint the form and re-sign it or make a correction cleanly than to scrawl something by hand. Okay. When you are, a common issue we're seeing is that you might get a letter once you submit your paperwork, or even the help tool might say this sometimes, that says you're in a forbearance and you can't be in a forbearance right now. But that forbearance to apply, so you have to exit the forbearance. That forbearance they're talking about is just the payment pause, and the payment pause does count for public service loan forgiveness, and Congress said it counts, right? So it's sort of odd advice to give, but you just have to ignore that. It's incorrect, and a lot of these letters are being auto-generated by the servicers, and although the government has told them to stop doing it, they have not been very compliant. So if you see something about, oh, you're in a forbearance until January when payments resume, then that's fine. You are not, you can just ignore that letter. Similarly, if the help tool is not letting you advance one way, but you can go another way, just do it, right? If they're saying, if you think you have enough credit to get cancellation through this process and you want to say that, I have 120, but it's not letting you for some reason, just pick the other one. It's the exact same form. They'll calculate your credits. Don't let the technology hold you back. And again, as long as they generate the form or tell you affirmatively to wait while they figure something out, you'll be considered on time. If you're just really running into an issue, download the form, fill it out, but get it submitted by the deadline of the 31st. And then finally, when you consolidate, we've been talking about this, when you consolidate under the special program rules, you should get credit for your whole history of work in your loans, even though it wasn't on the particular loan that you're now taking out. We're seeing some servicers send default letters, basically, or not default letters, but automated, auto-generated letters that don't reflect this, that reflect the old rules where when you consolidate, you start over. So we're seeing people get letters that say, thanks, you have a new loan, you have 2 months of Pslf credit on it, right? When you should have 10 years. Again, it's odd advice to give, just ignore it, keep records, keep all of these records, but you'll get a new letter in a couple of weeks once they process it that has your full Pslf credit. Okay, so final slide, important takeaways. Credit for time that previously was ineligible can be counted retroactively. The deadline is the 31st, so you have to take these steps, confirm your employer, confirm your loan type, and consolidate if necessary, noting that some people with the older loans have to do a little bit of calculus to make sure they're not going to harm their Biden debt cancellation opportunity if they have newer loans that are eligible for that, and submit your Pslf form, use the help tool by the deadline, or get the form in by the deadline. Everyone should try to get the form in by the deadline, but they have this flexibility if you're using the Pslf help tool. File a complaint if you have an issue. You're not going to be alone, and beware of scams, right? Okay, we've covered a ton of information. I hope this is accessible to you. We will make this recording available on also our website, forgivemystudentdebt.org. Forgivemystudentdebt.org has all of this information with FAQs. It is literally this webinar chopped up into 2 to 3 minute videos on each step, so you can go back and revisit the content that way. But now my colleague Amy Solata is going to join me, and we're going to go through some of the Q&As that you've been submitting.
Hi, everyone. Thanks, Winston. That was super helpful. We're getting a lot of really good questions. If your question was hyper-specific, we can't, give advice to individual borrowers, but we can answer general program information and equip you with as much information as possible so that you can get, the steps you need to take in under the waiver. So the first line of questions is really about forbearances and deferments. Do those count under the Pslf waiver?
It's a great question, and it's a little complicated. Under the Pslf waiver, the answer is no. Your loan had to have been in a repayment status. Forbearance and deferment are our status is of non-payment. You're being told it's okay to not make a payment. Those periods of time won't count under the Pslf waiver. However, separately, through a different but related program, the government in early 2023, very likely, is going to be saying, remember how I said IDR payment plans after 20 or 25 years, you can get cancellation there. So there's a similar credit on your account for IDR as there is for Pslf. Under the separate program they're doing in early 2023, they're going to go back and credit everyone's account towards that 20 or 25-year cancellation for any time in repayment, like Pslf, but also for major periods of deferment and forbearance. And once those credits hit your account, they will also count towards Pslf. So it's after the waiver and it's separate from the waiver, and there's not much you have to do affirmatively, but later in time, you might get credits for Pslf added to your account in 2023 once that separate IDR process takes effect.
Thanks, Winston. And could you clarify what you said about borrowers who maybe were on an income-driven repayment plan that had their income as $0 a month, or their payment as $0 a month? Do those payments count towards Pslf?
They do. So if you are on an income-driven repayment plan, which again is 10 or 15% of your discretionary income, which is not your actual income, it's a lower amount that's calculated. If you are low income, that discretionary income is going to be calculated as $0. So 10 or 15% of $0 is $0. So your payment, it's a payment, it's not a pass, is $0, and that will count. So much like how the payment pause months are counting, if you are properly registered or were in the past in an IDR program and were being asked to pay $0, that will count towards Pslf.
Thanks so much. And can you clarify, does time spent in being unemployed count for Pslf or on unemployment count?
It does not, and that's because of the employment requirement. So throughout all these changes, you have to have had full-time employment with a public service employer, government, 501c3 nonprofit, certain other nonprofits to count. If you ever don't have that full employment or unemployed or retired or go to the for-profit sector, none of those months will count towards Pslf.
Thanks, Winston. And where can people find the form to submit their Pslf forms?
So you should go to studentaid.gov, which is the federal government's central portal for all your student loan needs. And if you don't already have a login, you should make one because you should be going there to take control of your loans. And from there, there's going to be a menu on the top that says loan cancellation, and a sub menu that pops up is public service loan forgiveness. And when you click that, the Pslf help tool is the the program, the online program you want to use to generate that form.
Thanks, Winston. And where should those forms be submitted, and does it matter who your servicer currently is?
It does not matter who your servicer currently is, and the form should be submitted to the servicer that's dedicated for PSLF called MOHELA, M-O-H-E-L-A, and the instructions for how to submit it to them are on the forms itself. The forms are about a 6 or 7 page stack. Only the first 2 pages are the parts you have to complete. The remaining pages are just instructions on how to complete it, and section 7 has the submission information to MOHELA.
Thanks, Winston. And if someone already consolidated their loans and they didn't click MOHELA as their servicer, should they resubmit, or what should they do about that?
It's a great question. They don't have to resubmit. They're doing a consolidation. That's totally fine. If you fill out the PSLF paperwork and submit it to MOHELA, once they process it, that will trigger your loans being moved over, because not everyone has to consolidate, right? So the consolidation process is not the only way to do it. It's just a way that they've streamlined it. So if you need to move your account over, the way you do it, because you want to pursue PSLF, the way you do that is by filing the form that says, I want to pursue PSLF, and then they'll move your account over.
Thanks, Winston. What about Parent Plus loans? Do those qualify for PSLF and or cancellation?
Yeah, it's a great question. So Parent Plus loans, if you're not familiar with them, are a type of federal student loan that you take out for your dependent child or grandchild. So you are the borrower, but you're not the student. Normally, when you're a federal student loan borrower, you're the borrower and you're the student, right? So it's a special type of federal student loan. They count for PSLF, the general program, generally, but through a very convoluted series of regulations, they have to consolidate to access the IDR programs that most people typically use to accrue credit towards PSLF. Frustratingly, the Parent Plus loans do not count for this waiver. So if you consolidate your Parent Plus loan currently, you're going to be resetting your clock. You're not getting credit for past time on your loan. They do count for Biden's cancellation. So if you're a Parent Plus loan borrower and you meet the income requirements, you can get $10,000 or $20,000 if you have Pell Grants towards that cancellation. One thing I'll say about Parent Plus too, that separate process that's happening in 2023 where you can get credit that might count towards PSLF, that will count as far as we know for Parent Plus. So unless you have a specific near-term need to consolidate your loan, it might be worth waiting and seeing how many credits you get on that, because that might be the credits you need to get 120 for PSLF, and you might get your loans canceled that way.
Thanks, Winston. And do borrowers need to have 120 payments before the October 31st deadline?
No, anyone who has any work in public service loan forgiveness should apply through this. You don't have to be cancellation ready to benefit from this. If you have 80 credits, 10 credits, whatever it may be, you should take these steps just to make sure that you have as many credits as you possibly could have earned. And then once the program rules normally go back into effect on November, you'll just keep accruing until you hit 120. So it's definitely not only for people who have the full 120.
Thanks, Winston. We're also getting a lot of questions about consolidation, particularly for FFEL borrowers, for people who have FFEL loans. Could you first explain the difference between ed-held FFEL and then commercial FFEL? Yeah, that'd be great.
Yeah, so not only, that's very frustrating, right? Not only are there different loan types like direct and FFEL, your loans can be owned by the federal government or by a private bank, right? So FFEL loans can be held by the federal government, or ed-held FFEL loans, or commercially owned or commercial FFEL loan. The way that you can figure out, there's 2 ways you can figure out which one is you are, and you might have a mix of these, right? Is one, if your loan, your particular loan, has been receiving the payment pause benefit over the past 2.5 years, that loan is government owned, right? It's ed-held. Only government owned loans on the government's books are getting that benefit. If you have a federal student loan, but you've been required to make payments on it over the last 2.5 years, not voluntary payments, but you've been required the entire time, not with a short forbearance here or there, but in general, you've had to make payments, that is almost definitely a privately owned commercial FFEL loan. You can also go through the slides that we showed you about how to identify your loan. And if you click into the details, it'll show you who the loan owner is. And if it says like U.S. Department of Education or any abbreviation of that, / your servicer, that's ed-held. If it says like Bank of America or US Bank Corps or something that like very clearly isn't the US Department of Education, that is going to be a privately owned loan. So in that instance, to access PSLF, if you have a FEL loan, either way, you have to consolidate. For PSLF, it doesn't matter who owns your loan, it matters what loan type you have. So for PSLF, you have to consolidate. The reason we're bringing this up is because if you have one of those privately owned FEL loans, you are no longer eligible for Biden's $10,000 or $20,000 cancellation. But if you consolidate that loan with a loan that is eligible, like an ed-held loan, you compromise the eligibility for that other loan. So again, this isn't about PSLF stuff. Your loan can still be eligible for PSLF if you consolidate. This is about understanding the implications of your PSLF consolidation for the Biden debt cancellation announcement. And if you only have privately owned, didn't get a payment pause, FEL loans, it doesn't matter either way, because currently you're just not going to get that $10,000, $20,000 cancellation. So you should just consolidate all your loans. And if all your loans are with the government and you happen to get the payment pause, it doesn't matter either way, because you can consolidate and you won't jeopardize your cancellation opportunities. It's only people who have both types. Some of their loans have gotten the pause, some haven't, that risk eligibility if they combine them all together. And that's just the cancellation. You're not risking anything with PSLF. So it's still good you have to decide for yourself. If you have $8,000 left, but have 4 more years until public service loan forgiveness, you should maybe be considering cancellation as your fastest way to pay something down and protecting that. If you have a lot of debt left, almost no matter how many years of service you have left, PSLF is how you're going to cancel all your loans. So it might be worth it for you. If you're one of this smaller subgroup of people for whom this might be an issue, it might be worth it for you to just consolidate it all no matter what and line yourself up for debt cancellation. But again, for most people, this is not a problem. It's just people who are in this unique circumstance of having both types of loans.
Thanks, Winston. If a person has only direct loans, but they have multiple direct loans, is there any benefit to consolidation for those people?
There is a benefit if their loans are from different periods of their life and so have different amount of public service work attributable to them. Again, the example is you worked after undergrad, so your undergrad debt has some service associated with it, and then you went to grad school. So your grad school debt has less amount of service associated with it. If you combine them all in a direct consolidation loan, that entire new loan and all the dollars in it will be given the maximum amount of time on your account. In this example, it's the undergrad timeline. So if you consolidate all your direct loans together and they're from different periods of time, you can get to complete cancellation faster than if you were to just get them canceled on each of their own 10-year timelines.
Thanks, Winston. And could you repeat the different IDR plans? And are they all the same, or are there differences in them?
There are slight differences. They're all roughly the same. The differences are mostly about eligibility and which ones you can apply for. They all are under the umbrella of income-driven repayment, but their names are income-based repayment, income contingent repayment, PAYE, pay, or repay, REPAYE. It's going to always be an individualized choice, which one works best for you. For most borrowers, repay is the most generous. But as you do the consolidation, the studentaid.gov has a loan simulator you can use to figure out what your payment amount is going to be under each of them and to pick which is the best option for you.
Thanks, Winston. And how many signatures will people need? If they have multiple employers, how many employer certifications will they need to fill out?
You need one employer certification for each employer that you're trying to do. If you have multiple employers at the same time or across different times, you need a piece of paper from all of them signed. If you have one employer, but you have different periods of employment that let's say you took time off or you moved jobs and came back to that employer, or you went to part-time and then are now back to full-time, you should get a form for each of those discrete times because there's only room for one start date, end date. So if you have multiple start date, end dates for each employer, it's going to look really sloppy if you write in multiple ones, and that might get your form kicked out. So have multiple forms for different employers and multiple forms for one employer if you have different periods of employment for them.
What if a borrower is currently in-school deferment? How could they take advantage of the Pslf waiver?
So in-school deferment, if you're in school, your loans are in deferment, you don't have to make payments, will not count towards public service loan forgiveness. If you are in school and you have a full-time qualifying job, it might be worth it for you to call your servicer and affirmatively say, I don't want to be in school deferment. I want to make payments on my loan. And then once they take you out of that, you'll be in repayment again, and you can get credit for it. But again, it's only worth it to do that if you, in addition to being a student, have a full-time job that'll qualify you, and you then need to be willing to make payments, right? Because the in-school deferment, you don't make payments. But you have to call and affirmatively say, take me out of in-school deferment. I would like to pursue PSLF. I want to be in an Idr plan.
Thanks, Winston. We're going to get to 2 more questions before the end of our time here. But the next question is about the cancellation announcement. So what does that application look like? Is it out? How do people take advantage of? And will everyone need to apply?
Yeah, so the application is not available yet. It'll be available later this month. Once it's available, we are going to start launching webinars like this to help people walk through the application. It'll be much simpler, I think, than the PSLF process. As they've said, the process will be simpler. So you can go to our website. You can either go to forgivemystudentdebt.org or protectborrowers.org for information on those webinars once they're available, once it's announced, probably in the next week or 2. We will also be launching at some point in the next week, and you can, again, go to our website and we can push information about this. For those FEL borrowers who have to juggle this cancellation question versus PSLF in the next week or so before the deadline, we will have a special webinar to help sort of people figure that out. Everyone should expect to have to apply affirmatively. The application will be very simple. It's basically, you just have to tell the government what your income was in 2020, 2021. You can just attest it. They're not going to make you apply and submit, upload, IRS documents or anything. Some people will get it automatically if they've recently verified their income with the Department of Education. That's a minority of people. And even those people should keep an eye out, because they will get an opt-out form that they should complete only if they don't want to get cancellation.
Okay, just a public service announcement before we get to the last question, but the websites that Winston mentioned are forgivemystudentdebt.org. That is our website that we've built with some of our labor partners on the Pslf waiver. We're going to be sharing that and a list of resources along with this recording tomorrow with everybody who registered for this webinar. And then the place where you can find the application and the Pslf help tool, that website is studentaid.gov. But before we end, Winston, could you just tell us what we need to do before this October 31st deadline?
Definitely. You need to confirm your employer qualifies for public service loan forgiveness, all government, all 501c3, certain other nonprofits. It doesn't matter what you do, it matters who you work for. You then need to confirm your loan type. If you have anything other than a direct loan, you need to consolidate those loans with, again, the caveat of double checking whether there's a cancellation implication for you, but you need to consolidate your loans to benefit from PSLF. And all you have to have done is submit the consolidation application. You don't have to have gotten the loan processed. You just have to submit the application to be on time for that. And then the final step is you need to certify your employment with your public service, any past or present public service employer that you want credit for. Sometimes that can take time from the employer, so you should start that outreach process now, but you should use the PSLF help tool to generate that paperwork, because if you generate the paperwork using the help tool, you can submit the paperwork after the deadline as long as you generated it using the help tool.
Amazing. Thank you so much, Winston. And thank you all for coming today. I think that's all the time we have, but check out the resources that we'll send, and along with the recording of this seminar.
And tell your friends. I mean, this is very much a life-changing, time-sensitive opportunity. And although it seems very daunting, I assure you, when you sit down to start to do it with the resources that we'll follow up with, you can take these steps to do it, and it is worth it. It is worth it for many people to the tune of $10,000, for some people to the tune of $200,000. So take the time, prioritize it, but tell people in your work environment, tell people in your personal environment. We as a society stigmatize debt, and that's unfair right now, and we're trying to get the word out. So make sure people in your orbit know about this opportunity. And thank you so much.